Finally, markets bounce back, led by a strong showing from Apple and the tech sector. The OECD has revised its forecast for Eurozone growth lower, stating that the situation is the biggest risk for the world economy. Fitch has lowered its debt rating for Japan and says more downgrades could come if the debt situation is not resolved. I'm Brittany Umar, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with The Street, and together we bring you the Morning Call Express. So, Scott, of course, yesterday we got that bounce, day one of that bounce that we had been looking for. Now the question, of course, today is, can it continue?
Well, I think that's what's important, is for traders to map out resistance 1, resistance 2, and resistance 3. So at this point, having day one of a bounce is somewhat normal, especially considering last week, we talked about how the measured move of that head and shoulders pattern was complete, and finally that oscillator that I keep talking about met really oversold levels. We were finally at negative 75, negative 85. So yesterday we got the bounce. The question is, where does it go?
Now, if we take a look at the S&P chart, what are the resistance levels that we need to know?
I think yesterday we closed at resistance 1, but I think we do have some room to go if the market wants to continue higher. So if you look here at the chart of the S&P, this is what I was just talking about. You remember the left shoulder, the head, the right shoulder. Here is that neckline from 1420 to 1360. That got you down to 1300. That's basically where we got on Friday. Then yesterday we had a nice move. Went back to about 1315. I do think if you take a closer look here, you can see more room to go. You could probably see a move back to, I would say, right at this level, which is close to about 1335-ish. To I'd say maybe 1330, 1335 would be a reasonable area. And then sometimes they push the envelope a little bit more. If you remember, we broke down from 1343-ish. So I would say at this point, I know yesterday I took a little bit off on the close. I think this is your resistance 2, and then here's your resistance 3 area. I think right around 1340 to 1343, guys that covered their shorts into this down move probably look to take it or put it back on. So for me, I think another 10 handles or so in the S&P, and I'll definitely lighten up and figure out whether or not the market's worthy of a little bit more upside or whether to reshort it.
Okay, and yesterday also tech was among the day's biggest gainers, led of course by Apple. Most of the stocks that bounced well yesterday held their 100-day moving averages. So what does that tell you?
It tells you that when the indices come below the 100-day moving average, and some of the weaker sectors actually went to the 200-day, the stocks that held the 100-day held higher. They showed relative strength. So on a bounce day, they're the ones that act the best, and they did so yesterday. First, if you look at the Qs, you will see the Qs had a nice potent bar, obviously coming into some big support. I do think it has some room to come back to the 63 to 64 area. I do like the fact that Apple led the way yesterday. I talked about volume coming in. I talked about it holding the 100-day, which you just mentioned. And look at the size of this day. It just engulfed the last 3. So this showed some power. So I'm long Apple. I went long yesterday. I'm going to try and trail it. I do see somewhat of a descending channel here. So it probably will get some resistance as it comes into this, just say 565, 570, but if it could continue to go sideways and lead the market, there could be another nice entry to start a new trend here. But for right now, it was pretty, I would say, pretty prudent to cover shorts, get long, and now we'll trail it. Holding above 555 would probably be good there.
And banks were weak yesterday, but credit card stocks were better. Visa and MasterCard both reclaimed their 100-day moving averages. So what do you make of that action?
I think that, again, there are stronger stocks and weaker stocks. JP Morgan was gross. Still can't find a friend. If you take the name JP Morgan out of the chart, you look at this, you're like, oh my goodness, this is horrendous. And if you look here, it's broken every level. This was the first pivot level that it broke below, which was your way out. And now, I guess some people could trade versus 32.26, and it's below all the moving averages. But like you said, Visa held the 100-day. A little bit of a different story. We talked about getting a cute short below, if you guys remember, this 115.50. To the 100-day, so that's why you need to know where these things are. So you could have covered, and then yesterday some guys actually made some money long versus this 100-day. Here was your exit as MasterCard broke this ascending channel, and then right reclaiming the 100-day, you traded and then see maybe reshorted around 422. I know Priceline held the 100-day. eBay held its 100-day. So there's definitely things that are acting better. You just need to know where they're at and where they are in the whole spectrum of relative strength.
All right, well, of course, we're going to be diving into all this and more in the long version, so stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.